Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover earning announcements from Coca Cola and Shopify, S&P Index, property investment, global debt reaching record levels, the S&P 500 closing above 5,000, factors to consider when buying a home for investment, and Warren Buffett's comparison of active traders to one-night stands.
Global debt has reached a staggering record of $307, soaring $4 trillion in the third quarter of 2023, and experts are sounding the alarm. They warn that while some countries may bounce back, others are heading towards a slow fiscal death due to the debt crisis. Around 100 countries will be forced to make tough decisions, cutting spending on critical social infrastructure like health, education, and social protection, just to meet their debt obligations. Economist Arthur Lafferture predicts that bigger countries that fail to address their debt issues will face this slow fiscal demise. The debt problem has been fueled by both high-income countries and emerging markets, with countries like India, the US, Japan, and China playing a significant role in driving up global debt. Laffer Jr. believes there are only two possible solutions for countries: either increase taxes or grow their economies at a faster rate than the debt accumulates. Recent examples, such as Sri Lanka, Pakistan, Lebanon, and Zimbabwe, showcase how some countries have gone or nearly gone bankrupt. Experts worry that in the next decade, more countries may find themselves in a similar precarious situation. In other news, investors in the Airbnb arbitrage business claim they were defrauded in a scheme that promised higher returns than the stock market. Israel's credit rating has been downgraded due to its war with Hamas. Meanwhile, Amazon has secured exclusive streaming rights for an NFL playoff game, marking another milestone for the online retail giant's entertainment ventures. These developments highlight the intertwined nature of the global economy and the importance of staying informed about the latest economic and news trends. So, big news in the world of stocks. The S&P 500 just closed above the 5,000 level for the very first time. Can you believe it? We're only in the second month of the year, and the S&P 500 is already surpassing its targets. The experts were predicting a target of 5,700 by 2025, but with things moving this fast, those predictions might need some revisions. For the week, the S&P 500 gained 4%, while the Nasdaq saw an even bigger increase of 3%. Both indices had their 5th consecutive winning week and their 14th winning week out of the last 15. However, the Dow ended the week slightly lower with a decrease of 1%. So, what's been driving this impressive performance? Well, it seems that great earnings, slowing inflation, and a strong labor market are some of the main factors. But let's not forget about the influence of big tech companies. Meta and Nvidia have been major players in pushing the S&P 500 to reach these record highs. Meta is up by a whopping 18% year-to-date, while Nvidia has seen an impressive increase of 75%. It's worth noting that it took the S&P 500 41 years to reach its first milestone of 1,000 in 1998. Then, it hit 4,000 in April 2021 after the Fed slashed rates. Now it's taken just about 3 years for the index to go from 4,000 to 5,000. Some experts are even anticipating that it could reach 6,000 by 2025. Buying a home for investment can be a smart move. Real estate offers not just rental income, but also the potential for capital appreciation. However, there are some important factors to consider before jumping into the market. First and foremost, take a close look at the location. This will determine your rental income, the type of tenants you attract, and your vacancy rate. It's ideal to choose a neighborhood that is in demand, as homes there are less likely to remain vacant for long. Also, keep in mind any restrictions or fees imposed by the town regarding rental conversions. Taxes are another crucial consideration. While it's impossible to completely avoid them, doing some research can help you anticipate expected tax increases. You may want to avoid regions that are known for excessive tax pressure. Facilities in the neighborhood also play a significant role. Look for areas with good amenities like schools, hospitals, and parks, as these tend to attract more interest. Be aware of any upcoming developments that could potentially boost property values, such as the construction of big malls or government investments in public transportation systems. Safety should be a top priority. Check the local homicide and theft rates and see whether they are on the rise or decline. Also, assess the region's vulnerability to natural disasters like storms or fires. Avoid neighborhoods that are prone to such risks. Consider the job market as well. Towns that offer good-paying jobs are more desirable for tenants, while those with a limited job market may not attract as much interest. Avoid investing in towns that are losing college graduates due to a poor job market. Lastly, decide on the type of property you want to invest in, commercial or residential. There are different options within each category, such as condos, villas, or offices. Take into account any eligibility for discounts, especially if you're buying your own home or if you qualify as a first-time home buyer. Warren Buffett once said, and I couldn't agree more, calling someone who trades actively in the market an investor is like calling someone who repeatedly engages in one-night stands a romantic. Now let's unpack this quote a bit. Buffett is making a clever analogy here, highlighting the difference between someone who actively trades in the market and a true investor. He's basically saying that people who constantly buy and sell stocks are not really investors, but more like short-term thrill seekers. It's like comparing them to someone who has multiple one-night stands in search of temporary romance, rather than someone looking for a lasting and meaningful relationship. Investing, on the other hand, requires a long-term perspective. True investors focus on understanding the underlying value of a company and investing in it for the long haul. They don't get caught up in the excitement of short-term fluctuations and market trends. Instead, they carefully select their investments based on careful analysis and a deep understanding of the business. So, next time someone refers to themselves as an investor, but they're constantly jumping in and out of the market, remember Buffett's analogy. True investing is about patience, discipline, and seeking long-term growth, not a series of flings in the market.
In this episode, we covered earning announcements from Coca Cola and Shopify, the record-breaking global debt, the S&P 500's milestone, factors to consider when investing in property, and Warren Buffett's thoughts on active traders. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.